Boom. All right. So, for those that don't know, my name is Hunter, and I'm kind of been helping out here as much as I can. Uh, I specialize in options mainly, but also a lot of just education is my biggest thing. Risk management, education, shit like that, to make sure that anybody can anybody can actually make money. That's the part's easy. When a stock goes up, anybody makes money. When a coin goes up, anybody makes money. But the real thing is how to keep money. So that's what I try to explain. That's what I try to focus on. So one thing I'm going to go over. This is a little layout that you guys see. I'm going to go over a little bit of the psychology and risk management. So my 60-day challenge, what I do, why I do it, why is psychology part of risk management? So psychology is the biggest part of risk management because if you don't have the right mindset, if you're not having a good day, then your trading is going to be shit at the same time. You're not going to be a good trader, as good of a trader as you would be if you were in the right mindset, if you were in a confident mindset. So let's say like Brody and I, we started trading at the same time. We started trade learn from the same person, everything, but he's confident and I am mild. I'm kind of timid in my trades. He will have a better P&L every time, even if we play the exact same setups, just because his confidence is higher. His mentality is better. And so that's why I push mentality in psychology more than technical analysis most of the time. You can be a phenomenal analyst. You can be great at technical analysis, know exactly where the coin or stock is going, when it wants to go there, except still not make money. And that's from having a bad mentality. So, my 60-day challenge, what I do is I start this usually at the beginning of the year. And so I do, and it's just everyday habits. They should only take a couple minutes. It's never hard. 15, get out of bed within 15 minutes of waking up, meditate every day, get your affirmations in, a random act of kindness to a random person, or anybody really. It can be your family, random person, whatever. You work out every single day. You show and appreciate the gratitude. So, me, I personally have a gratitude journal. And so I write in it every day, at least 3 to 5 things that I'm grateful for that happened that day, that I'm just something about my life. I'm grateful for breathing, everything. Write down everything you're grateful for. And then as you're going throughout the day, it helps you think of the good things that happened throughout that day that you can write, and you are consciously more grateful of things that go on throughout your day. And that also goes through a journal, kind of how you felt through the day, how everything went, little things like that. Cold showers, which that helps with discipline. Brody and I were talking about this a lot. Your cold showers is you may not. Most of the people don't want to have a cold shower. I mean, it's never fun, especially in the beginning. But what that does is that brings your mind to say, hey, I may not want to do this. Because you have that little voice in the back of your head saying, oh, just make it a little warmer. Make it a little warmer. We can have a hot shower. That might feel good. But in reality, you can be disciplined and tell yourself, no, voice, I'm going to have, I'm going to take this cold shower because I don't want to. Getting yourself in an uncomfortable situation and getting comfort out of the uncomfortable. Diet, what you put into your body is incredible for you. So like me, I try to eat as much as I can, lean meat. I don't eat sugar. I don't eat fast food hardly. I don't eat I don't drink soda, shit like that. So make sure you have your own diet. No alcohol. I haven't drank it personally in almost 3 years. So instead of no alcohol, what I did was slow down with cannabis because I am a heavy smoker. Learn something new. You should literally be learning something new every single day of your life. Whether it's about yourself, whether it's about a skill, whether it's about a mental state, Learn something new. My new thing lately I'm doing is I'm learning jujitsu. Over the over the fall, I was learning how to run half marathons and learning how to push my body in different ways. And then your visualization. And this is one of the biggest things in my opinion out of all of these visualizations, affirmations, and meditation. Those are my absolute the three absolutes. And visualization is just sitting there, closing your eyes, and picturing the process of where you want to be, the process of your goals, and how you are going to reach the goals that you have. And so these are my 60-day challenges that I do. I do them every year. Sometimes I'll push it to 90 days. For me, it's pretty much an everyday thing now, but it's I print these out to one remind myself, and then two to it feels nice. It feels good to put an X in here in every single one of these as you do them, as throughout the end of the day. Oh, I did all of these today, and say, hey, you know what? I did good today. You pride yourself. You give yourself that little sense of accomplishment that, you know what? I did well. I kicked ass today. And that brings your confidence up. So the psychology, the mentality. The first time I did this, I was working sales, and for the company, about I was doing about 30,000 revenue before I started doing this, and then I started doing this, and the first month I did this, I hit 65,000 revenue. I had one other partner that I was working with this on, and between him and I, we did this 60-day challenge together, and we were working the same job. Between him and I, we did 125,000 in sales in 2 months. No, 125,000 each month. It was 250,000 in 2 months. And that was the most we've ever done in our life. We kicked ass. And so that's why I continue to do this. Get it as part of your routine. Your morning routine is what's gonna make your day. And I'll go into why this has to do with trading in a minute. So, because this is a little off the risk management and everything, but this is where it starts. So, your morning routine, what you do, makes your day. Get your workout in, get your meditation in, get out of bed quick, get your cold showers in, get your water, and get a routine for yourself every single morning. Mine, I get up at 4 a.m., I run 4 miles, I meditate. Actually, I do yoga before I do my 4 miles. I do a little bit of yoga. I run my 4 miles, I meditate, I do my journal, I start doing stocks. Boom, I have my steps. Every single time, every single day, Monday through Friday. Weekends, I give myself a little leeway because they're the weekends. I'm chilling with my kids. I don't always run bright and early. So, I mean, I give myself a little leeway on the weekends. Still get out of bed within 15 minutes, still do everything, but I don't do my exact routine. But once you get your Monday through Friday, you get your routine, and that's going to set your mind throughout the day. And so how does this help with trading is when you don't have, like I said earlier, when you don't have a good mentality, if you're sick, if you wake up and you just like the other day, yesterday I woke up and my KuCoin account was just gone. Fucking just a smaller, just a 10K account, like not a crazy amount, but it's fucking 10K. Anybody's gonna be mad about losing fucking 10K. And so it was gone, but because I was so focused and so messed up with that portion of waking up to that, I didn't get my routine done. And by not getting my routine done, I had a shit trading day in the stock market. And after that, the whole day was just kind of fell apart. And so if I would have, okay, calmed down, did my meditation, and had a better mentality throughout the day before and did my morning routine, even though that shit happened, then I would have had a whole ass better day yesterday. And so that's just how it starts. It's a play on it's a layers. It layers up. You start your day and that layers to create a better day. And so these are some of the notes I have for the risk management and psychology. You never give up. You can lose a million times, but as long as you learn from those losses, then you're always going to be a winner. You will eventually learn. You will eventually make it happen. Never take large losses. So a large loss to me, and this is where I'm very mechanical with a lot of this, and so it's all math. It's all math. So a large loss to me is defined as a single trade accounting for a loss larger than 2% of your account. So you have a $10,000 account, 2% of 10,000 is $200. So if one single trade cannot lose me any more than $200, that is the max amount I am allowed to lose in that in any trade. So you always have a stop loss to make sure you can't do that. And if you guys are asking questions, Brody will probably help. And I haven't. I'm going back. I'm trying to go back and forth, but I'm only on one screen. And if you guys can't hear me, let me know as well. Yeah, it's recorded.
Messaged me and said that they were very, very interested.
Oh, really? While you're at work?
Yeah. Um,
So next, I always look for a good risk to reward. And so I'm going to go on TradingView and kind of show you guys all of this after I explain it on here as well. Good risk to reward. Always want to have at least a 3-to-1 trade. Actually, I'm just going to go on TradingView right now. Change windows. Favorite chaser. We gonna help you with that, homie. You gonna fucking get it. You'll make more money than you ever have in your life. I'll tell you what. Alright, so I got go on to TradingView. So now we're gonna go to the the real fucking thing for risk management. So this, if you have TradingView, you got your long and short position right here. This is one of your best fucking friends. I'm gonna take off all my indicators. Clean up all this whole ass chart. Boom. So when you're in a trade, let's say you wanted to short link somewhere right around here. This is just all theoretical. It's just to show you the how we do it. So you want your stop loss. So you have, let's say you want to put up you have a $10,000 account, and so you have this trade. You have a stop loss about 2% is usually my max stop loss. That's what I don't like to have a stop loss any more than 2%. And so if you put up $1,000, then that's $200. That's 2% of your account. So that means if you have 2%, I always want to do a 3-to-1 risk to reward. And this risk ratio will show you right here. Boom. So 3-to-1. And why do I do 3-to-1? Is because you can lose 2 out of every 3 trades. So if you have, let's say you have a $10,000 account and you lose one and you win one trade, make your 6%. That would make put let's say you make $100. You risk 100 to make 300, 3-to-1. So you make $100, you make $300 one time, and then you lose 100, you lose the next trade. So you lose $100. You're still up from your first trade. You lose the next trade again. You lose $100. So you only have to win one of every 3 trades with a 3-to-1 risk to reward. That's a 33% win rate. And you're still profitable. And that's where what blows people's minds a lot of times. You don't have to be a great trader to be profitable. You don't have to win every single trade to be profitable. As long as you have a correct risk to reward, at least a 3-to-1. That is minimum. If you have a 5-to-1, then you can lose, what is that? You can lose, say you have a 5-to-1, you make 500 to risk 100. You can lose every 4 trades. That's a 20% win rate. And still be profitable. And so that's where your win rate, your risk to reward really comes in handy. And that's what is one of the biggest focuses for me a lot of the time. Because you're able to lose more trades than you win. You don't have to be directionally right to be profitable. As long as you have the right risk and as long as you cut your losses quick and let your winners run. Do not, one of the biggest things is I don't fucking average down on shit. I never average down. I will average up as I know that it's going my way, but I will not average down on a position that's going against me. You don't, if you're already down $1,000 and you average down and it continues to go down, you will be down $2,000 quicker than you lost that first 1,000. So that's where I will not average down. And that's a huge retail trader thing, is to average down. Is to, oh, it'll go back up eventually. Why not get out? Save your mentality, save your mental mindset, your mental health. You don't have to stress about being down a position and losing money. Just get out. Admit you're wrong. The biggest part about being a trader is admitting that you are wrong. You will be fucking wrong. It's okay. Admit you're wrong, get out, and get back in at a lower price. If I thought Link was going, if I got in Link at $34 and it goes to below $30, let's just say, I'm fucking gone. Out. I don't care if it continues to go up or down. If it goes up, I can buy back in. But if it continues to go down, that just saves me a heartache. Let's just say you did buy this at 35 and you did not sell at 30. That's a 10% loss anyway at 30. And you continue to go on, next thing you know, you're 50% down. You're still 24% down from where it is right now. Say you average down at 15. You took a 50% average down, so you did exactly as much as you already had. You had $1,000, you put 1,000 more in, and now you have an average right around 22 to now you have an average right around 25 level. You're still barely profitable, but it fucking took, you're now holding up your money for almost 2 months, and you never know. Instead of getting the fuck out, letting this ride down, and getting back in when you see strength. You don't buy on dips, you don't buy the dip, you wait for strength to show, and then you buy on strength. I don't buy dips, I buy strength off of dips. I let the market show me that it's strengthening up, that it wants to go higher, and then I buy. You may lose 5% of the position, but you'll be right a ton more, which in turn will give you more profits. You won't be wrong as much. And especially if you have a 5-to-1 or a 3-to-1, and then next thing you know, you're right every 4 out of 10 trades or 5 out of 10 trades, then your risk to reward just came up so much more because you've been playing with your 3 to 1. You've been winning positions because you're not buying on a dip and you're waiting for strength. And so that gives you the probability of your winning, and you're keeping your profits a hell of a lot higher. Your batting average, how much you make and how much you lose. Your batting average being your probability of winning, your percentage of winning. And so that's one of the things is I make sure I always try to keep track of your batting average. Boom. Another thing next is don't fight the trend. So if you see a trend being, what is a trend? Trend is higher highs and higher lows, right? So you start here, let's just say, low, high, lower low, lower high, lower low, lower high, lower low, lower high, higher low. So this is now showing a weird trend, not even a trend really anymore. Higher low, this is an equal high, higher low, lower low, no trend. Don't trade as much when there's not a trend. If there's no trend showing, if there's no higher lows and higher highs, now you got a consolidation. You don't trade, I mean, you can trade bounces on consolidations on the ranges, that's fine. But it's a lot when you're in a smaller consolidation, like let's just say you were in this area right here, that's a pain in the ass to trade. You can't, that's hard to trade. A small range like that, you never know when it's going to go up, when it's going to go down. Instead of buying, so this is why I don't buy the dip. This right here is perfect. Instead of buying this dip right here, let's just buy the dip. Wait for strength. Boom. Wait for a breakout right around this level. Pop up, signs of accumulation right around there. And now you can play the break or the retest and allow it to come up. So what percent would you be missing? You got 62% if you would have gotten at the bottom, or if you would have been patient, but who knows if this was a bottom? You never knew that on this day or this day that it was going to be a bottom. It never showed signs. Allow an accumulation. Brody, I know Brody's been teaching a lot of like the Wyckoff types too, to a lot of you guys on one-on-ones. And so you're giving up a small percentage to guarantee that you're going to be right. And so then, like, don't fight the trend. If you see lower lows and lower highs, then then stop buying. Don't buy if it's low. If it's continuing to go down, don't buy. Like I know not a lot of people here are in stocks, but I do a lot of stocks, and a lot of them are going down, so it's a best example for me. You see, this is PayPal. High, low, lower high, lower low, lower high, lower low, lower high, lower low. This is a downtrend. Of course, this is a downtrend over the course of 5 months. And so I do not, and say you've seen it right here. Oh, let's buy it. It's showing strength. Let's buy the dip. Boom. You get fucked off, and look how much further down it is. You wait for real strength, and that's where your moving averages come in handy. Um, Personally, I use a lot of moving averages. I love moving averages, mainly the 50, the 21, and then the 200. Let me use this 200. And so these are all on a daily chart. And this is why I'm very mechanical with a lot of my stuff. Because I do use moving averages. I do. It's like one of the only Uh, is it working or is it freezing? I seen somebody else freezing. Fuck. It's glitching, but it's working. Okay. This is supposed to be a really good computer too. Let me see what I can do real quick. I think it's Discord. Oh, I'm gonna turn off my VPN. I wonder if that'll help too. I was thinking about YouTube too. I think YouTube might be a really good move. YouTube or Zoom. YouTube, I can record it right there though too. That's one of the cool things about YouTube. Alright, I have pretty much everything off on my computer. There's no other apps open except for TradingView and Discord. Um, is it working a little better now? Screen just cleared up tons. Hell yeah, hell yeah. Bet, let's fucking go. My bad on that. Thanks for letting me know. If it's like something like that, feel free just at me. Cause I'm not always looking in chat. At me, and then I'll be able to see it. I bet. So let's clear up these. Alright, we ready to go. So moving averages is where I was at. They are one of a trader's best friends. So what I use, I don't use a 50 EMA. Hold on. What I use specifically, and I get these a lot of these from from books. I read a lot. And so I've learned a lot of my moving averages and the type of trading I do from more of a institutional, larger larger money type of trader. Not like a Wyckoff though. Similar, but not like a Wyckoff. Not like a smart money concept. More of like a hedge fund type. And so you trade the trend. And so your moving averages will show you your trend. You see right here in PayPal, your moving averages were pointing up. You have your short term, mid term, and long term. Your three moving averages. Short term, 21 day, 21, and I use an EMA for that personally. And then midterm, 50 day, 50 MA is I use a smooth moving average, SMA or just an MA. And then your long term, your 200. That's your 200 day. And so when your moving averages are converging like this, they're swimming up and down like this, there's no trend. So it's harder to trade. Be careful trading when there's no trend. Wait for them to come. Wait for them to trade. Wait for a trade. Be patient. You can trade these oversold bounces, trade the breakouts as you wish, something like that. But just remember when they're going up and down, there is no trend. But then as soon as you start getting them over, you got your 21 over your 50 over your 200, all pointing up, you know there's a trend. Excuse me. So like right here, this is right after our COVID crash. It comes up, you have your 21 over your 50 over your 200, all pointing up. Boom, you have a trend. They start converging, don't trade. Trade oversold bounces, yada yada. Small trades, nothing big. Then you see the break, you see them start coming up again. You see these moving averages pointing up. Boom, 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 boom. You trade. You trade the break, you trade however you wish, but there you have a trend. Your moving averages are telling you that they're going up. And this is where a lot of my risk management comes in. This 50 day is gold. This 50 day is God. A lot of times, the 50 day, boom, 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 you don't cut if it doesn't break the moving average. This is a 21 day. So, like on this one, it just never broke the 21 day for fuck how long? If you would have held just while it was over the 21 day, see how over here, this level is like whatever. I mean, that's up to you if you want to do it, hold through that. But you could have gone in a 96% move in 135 days. And that's just simple. You buy and you just wait. You just wait, 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 wait until it gets back below a certain moving average, whatever you want. If it's holding that moving average, then use that one as your stop loss. See, it's holding the 21, so use the 21 as your stop loss. If it was the 50 this whole time, your midterm, then that would have been a stop loss. Generally, your 50 is your bounce or stop. See right here, once it broke down, now it's in a downtrend. Your 50 is declining. Your short term is below the midterm. Boom. They're pointing down. So it bounces, it comes up to the 50 day. If it's below the 50 day like this, I will not buy it. If your 50 day is pointing down and it is below the 50 day, I will not buy it. That's like a like huge rule for me, especially if it's pointing down, especially if the 21 day is pointing down. I will not fucking buy that shit. Wait for it to come up. Wait for it to show you it's going up. I would short it. Say, see it coming off of the 50, get rejected, short it. You could have shorted it 36%. Just short it on the 50 and hold until it breaks back above the 50. Boom, boom, boom. It's all the way down here now. And so that's where I use moving averages as one, a trailing stop loss. That's a huge thing to save your profits. So if you're going on the way up, if you're buying on the way up and you have a trailing stop loss, it saves you from holding until all the way back here. Say you think, oh, you got in over here and you come up, you ride it all the way up, and then you ride it all the way down. What fucking good is that? You just wasted a year of your life and your money. And it's at the same exact spot. So how do you know when to sell? You have rules. You have you have your trailing stop loss. You have there's a lot of other rules which I'm not going to go into, but the trailing stop loss is the biggest one for me that I wanted to go over. And so your sell rule where if you have a trailing stop loss, usually I'll use like a 21 day as my trailing stop loss. So that's my favorite because that's more of a mean reverting moving average. And when you have your 21 day, that shows when you're below or above your 21 day, that shows strength if you're above and weakness if you're below that 21 day because it's more of a short term moving average. And so see it's above the 21 day right here. Boom, boom, boom. You could still buy it. And then say you wanted to you use your 21 day as your stop loss. Let me know if this is making sense to you guys too. And 30%, you stop loss, you ended up with 23 instead of 30, but you still got stopped out. If you would have held even longer, next thing you know, the next day, the very next day, you would have been at 15% instead of 23%, giving back all your gains. I don't know how many indicators you can use with free version of TradingView. I have the premium, like the highest you can get. Just get don't be scared to spend money on your subscriptions for trading. They're write-offs. You just write them off. Write everything off. Yeah, and what I do is I have the shortest moving average as the thinnest, and then the thickest moving average as the longer term. So 21 day is the purple, 50 day is the blue like aqua, and actually like 200 is usually a deep purple with that's thick. Yep, I like a thick deep purple for my 200 like that. And then my 21 is actually usually my blue. And then my 50 is my green, is my orange. I'll leave 50. There's no good color with this. Green will work. 50 is green. So yeah, 21 is your small one. 50 is your medium. Yep, see how I have the medium right at 2. And then your 50 is your thing. And that's a visualization. It helps me know without having to think about the moving average what's what. Yeah, everything's a write off. I have subscriptions for so much fucking shit for MarketSmith, IBD Live, IBD, everything IBD pretty much. I have it for Bloomberg, fucking Wall Street Journal. I don't even care. There's stuff I don't even know. I don't even care. Just get them and write them off. Oh yeah, and your Discord is a write off too. Yes, your Discord is a write off. Talk to a financial advisor and everything about that, but yeah, that's
Hunter, on God, it's a write off.
yeah, it's all
Dead
write offs.
ass.
Yeah, on deadass, it's all write offs. Yeah, like I wrote off part of my house, part of my rent. I write off part of my phone bill. I write off part of my Wi-Fi. Fuck, dude, like everything's a write off when you're a trader. It's bad.
We're also gonna go over. We're gonna have a stream, going over the paperwork that you need to fill out to have an LLC for trading as well, which you get to
Yes.
extra write shit off at that point, and then you get taxed at a lower rate for capital gains because you're doing it through a company. So that'll be a whole other stream within itself. But yes, sir, this
Yeah.
shit. There's reasons why we're in financial services, and why we're self-employed. So
Oh.
yeah, we'll save that for another day.
Yeah, so back to moving averages. I think I pretty much went through most of it. Don't buy on a declining 50 day. Don't buy on a declining 21 day. Um, if you have so your 200 day, your long-term moving average is long term. So what's that tell you? Where the real long-term trend is. And so if the 200 is going up, if it's above the 200, it's bullish. If it's below the 200, it's bearish. My personal opinion, I will not fucking buy anything under the 200-day moving average. I don't care if it's crypto, I don't care if it's stocks, I will not buy it. I might trade it for a small bounce, but that's an in and out. I'm not sleeping on it. I'm not going to work on it. I'm watching that bitch tight if it's below a 200. I try not to buy them. Wait for a pullback up so you can short it. Because it's a downtrend. But yeah, I do not buy above a 200 day. Buy below a 200 day. Buy when it's above the 200 day. Always, always, always. Matic's a good one. See right here, it never breaks the 200 day. So even though it pulled back so hard, pulled back 80% or whatever on this fucking off of this, yeah, it pulled back 80%, it was still above this 200 day. This 200 day was still pointed up. So that told you that it was still in an uptrend. Buyers are still here. Long term, this is still in an uptrend. So you can buy it. Buying off of the 200 day, this is where risk to reward comes in handy. Boom. So you see your 200 day. This is your 200 day moving average right here, your thick purple line, and it's coming off the 200 day. As it hits it, fucking, there's your risk to reward. You buy with a stop loss below the 200 day. If it closes below the 200, get out. If you would have said that and bought it below the 200 day, right here, as the 200 day was popping up, you would have held it. Boom. It didn't close below. It touched it again, but didn't close below. Held it. Held it. This is at 68 fucking cents. 67 cents. It's at $2.30 now. You have a risk of, let's say, if it closed below the 200 off of that, would have been about 6%. 7% is usually my max with equity. I don't like going more than 7% with stocks, 10% with crypto. So you have a 6 to 10% risk, whatever one, wherever you buy it, less than 10% risk. To and even if you're only seeing this portion of it, if it's this day specifically, and you're thinking, okay, well, I have a 10% risk, let's just say, my reward just to all-time highs is 250%. That's a 10, that's 24 to 1, roughly. I'm not gonna do quick, I'm doing quick math here. It's like a 24 to fucking 1. Who doesn't want something like that? Boom, it buys it again, it hits it again. You're still able to stay in because you bought it off the last bounce of the 200. Boom, boom, you're still good, you're still good, you're still holding this. Now, if you want, you use your trailing stop, you use a 50 day, a lower low, whichever one. What I use also, if the 50 day, see on this crypto, the 50 EMA is not really being, the 50 moving average isn't really being respected. I'll change it to an EMA to see if that's being respected a little more, which is not. So Matic just has a freaking mind of its own. It's not respecting its moving averages except for the 200, but what it is doing is it respecting its trend. What is its trend? You have your lower lows right here, higher highs. Now, micro trends, we're still in, so now we have a higher high, higher low. Oops, I don't want this one right here. See your low right here, a higher low, higher high, higher low, higher high, higher low, higher high, higher low. It's always respecting its trend every day. Higher high, higher low. It's still respecting this trend. So next thing, what would we expect next to break this higher high? You expect it to break 290. And so as it comes down, you see it pivoting, see it breaking out of a short-term consolidation, whatever your buy points are. That's not what this stream is about. It's about the risk management of it. Whatever your buy points are, you want your stop loss within 7 to 10% equity. Perfect. See it bouncing, and now what do you think? 7 to 10% equity would be 30% minimum for the upside. It's 37% for your upside from around that area, from a pivot, which a pivot is just a break of a break of a consolidation or a short-term consolidation. And by that I meant these 1, 2, 3 days. Break of a pivot, you see your higher high, and so you would expect to get back up to this high with a risk of about 7%. There's your 3 to 1. You can always find trades a lot of times as long as you have your 3 to 1. No, Matic actually. Oh, dude, it hit my fucking level, Brody. Bro. I might short this. Now it's looking like a head and shoulders. They got me excited, lost my thought. And my Google Docs notes. Good thing I have my phone. It's on and off. Damn, this thing is finicky. Yeah, we'll definitely go to like a YouTube or a Zoom next time. But that's one of my biggest things is risk to reward. You never take your large losses. Fucking eat them. Eat a loss before you take a large loss. Eat a small loss. Get back in. Don't be afraid to admit you're wrong. And when you get stopped out, when you get when you get when something stops you out, when you are wrong, don't just say, "Oh, fuck that coin, fuck that stock. I'm done with it, I'm never going to look at it again." No, you want to watch that one coin more than anything else usually because whatever you thought could is probably still right, but you may just be a week early. Most I can't remember who, I think it was Mark Minervini that said it. I can't remember who exactly, but somebody in an interview I read, they said most traders are right. They're just a week early. Some of the best trades we had are the thoughts we had last week. Meaning be patient. Don't lose sight after you finish your trade. If you get stopped out, whatever happens, you take profits and it was good trade. Continue to watch that because it might just still go up. It might go down. It might continue to go down and give you a better entry. And there another thing is don't be greedy. There's a saying that bears make money and bulls make money, but pigs get slaughtered. So by a pig, I mean the greedy. Don't set your take profit, set your stop. When you get into a trade, you want to, and that's what your long short position is. Like me right now, I want to get into this Matic trade right here. Right here, I want to. Oh shit. You accidentally had the. So I want to get into this magnetic trade. So you set your stop loss where you enter, and then you set your take profit. Say I want to get into here and I want to short it down to here. This is great. 2 to 1 risk to reward. So you go down a little bit. Now short it down to here. This looks cool.
You're still doing your live?
Yeah.
Okay. I'm getting them down for bed now.
Okay. Sorry. Kids are going to bed here in a minute. But you set your take profit. You set your stop loss. You got your stop loss above these highs right here. Stop loss above yesterday's high. Your entry right around, I would enter on a break below yesterday's low, and then look to get, you're expecting, so now it made a lower high, higher high, a lower high, so we're either expecting to catch these lows or make a lower low. And so I would either get from here or right around here, one of these two wicks. Personally, I think this 172 would be great. And so boom, you have your stop loss, you have your take profit. Stop loss right here. Okay, it's at 3.5 to 1 risk to reward. You have your whole trade plan. You have planned this out. Now the key is throughout this trade, don't change your fucking plan. You may trim, trim with the trailing stops. Take a little bit off the table here and there. It's never a bad thing to take some off the table. But don't get out of your full position till A, your trailing stop hits or you get hit from your original stop loss, or B, your take profit is hit. You have 3 take profits on the way down. On the 3 take profits usually, like one I would do here, for a little bit. You could have that one other one we were talking about for a little bit more. And then, boom, here. So as you do it, you take your profit, set stops at break even. Or set stops in profits a little bit. Boom, it goes down more. You take your second profit. I usually go in thirds. I take 33% of the time usually. And then you set stops. And so one thing that I am sorry, my laptop's about to die, so it might be a little quieter. So I'm not next to it. Plugged it in, we're good. One thing that I'm huge about is when you have profits like in a trade like this, don't give back more than 50% of the full profits you had gotten. So let's say it came down and you wrote it down. Let's just say you wrote it down 20%. That means your trailing stop, for me, this is what I do, must be higher than 10% of the full win. And so I would always do a trailing stop, let's just say at 13%, wherever you figure it out. It has to be above 10% because you don't want to give back. You made a 20% gain, you don't want to give half of that back. Maybe a quarter of it is fine, but don't give back half of those hard-earned gains that wonderful trade you just had. Don't fuck it up by giving half of that back. Give a little back, but don't give a lot. When you have a certain amount of profits, if you have 20%, don't give any more than half of that back. That is max would be 10% you give back. Generally, I like to do about a quarter, 3/4. I want to keep 3/4 at least of my profits. If you're, and I'm a swing trader, so this is not really long term. I mean, you could use it as long term, but this isn't really a long term. This is a spot portfolio, equity, options, anything like that. Futures, everything like that. Mainly derivatives, equity, all of it. And so that way, it builds, then it builds. You say it comes, you take your profit at a third, right here at 15%, you take a little bit off at 20, you just trailing stop at 15, it comes all the way back at 10, and to your first take profit, it's starting to look good again, get back in, not a big deal, and ride it back down to your original profit target. So that's one thing, don't ever do that. Because that's how you keep your gains. It's cool. It's a 5-to-1 right here, but if you ride it all the way down, if you take a little bit here, take a little bit here, and then give back half of what you took, you're not respecting it as much. So that's the gist of my risk management. I don't give back a lot. I don't give back a lot of my profits. I don't fucking take large losses. I don't buy downtrends. I make sure I don't like to buy consolidations unless it's smart, unless it's bounce like short-term trades. And I'm not greedy. You never ever greed is the biggest thing that will make people lose. Cuz everybody can make money. That's easy. And so that's me with my risk to reward. I kind of want a short Matic, but I want to see more weakness before anything. Let me look at a 30-minute chart. Yes, look at this. Look at this kind of distribution. Equal high, equal lows. But yeah, I'm a sailor. If you guys couldn't tell, I cuss a lot. So, oh well.
Fuck that shit. Cuss as much as you want, bro.
That's what I'm saying. I used to get in trouble in high school for that shit all the time, and I'm like, I don't give a fuck anymore. I work for my. This is why I
No,
went to this
money doesn't
fucking.
give a fuck about money doesn't give a fuck about feelings. It also doesn't give a fuck about what words you use, man. Keeping it real.
That's what I'm saying.
As real as fucking possible, man. I cannot not be myself. And if I'm gonna tell you the truth about something, I'm probably gonna fucking cuss when I say it. So do your thing, bro.
Yeah, cool. That's what I thought too.
If you got a problem with it, goodbye.
Look at this
All I
fucking
got to say.
walk on Matic, by the way. It's coming.
Yeah, I just scalped the shit out of one on Phantom. Look at Phantom 15 minutes, got a fucking had an order block on it. And I just
Matic is
during
filled with
during
order
the
blocks,
stream.
dog. A lot of times.
Oh yeah.
A lot of times you can just put your take profits, stop losses if you are shorting on these order blocks, and set fucking buy orders at the same time for little scalp bounces.
Yeah, you catch a little double dose.
Yeah. What you said, Phantom? I'm about to. I'm probably gonna get
Yeah,
off.
look at the 15-minute chart on Phantom. It's like clear as fucking day.
Yeah. All right, I'm about to head off for about 15 minutes to put my kids down real quick.
You see it?
Oh my god, this looks so good.
You see that order block right there? Look right there where that fucking humongous impulse move is.
Yeah.
Yes, sir. Yeah, I told chat, check that shit out earlier. I forgot that I even set a limit on it.
That fucking type 2 off of it.
Yeah. Yes, sir. Pays to pay attention.
Boom, right there.
It was definitely on the riskier side, just because of the move that Phantom has made. You know, a good sweep of sales could have taken that order block out, so that's why I didn't call it.
Yeah.
If you're wondering why I didn't call it out, so but it was on the riskier side, but it played out very well.
Alright, I'll be back in about 5 minutes. It's still being recorded, so whatever you say and go over while I'm gone will still catch. It won't do any of your your stream if you're streaming, but it will do your audio. So I appreciate you guys. I'll be right back.
All right, can everybody hear me all right?
Yes, sir.
All right. So, you know, Hunter is an absolute fucking G with this stuff. He is, when it comes to risk management, he clearly, you know, he has a plan, he has a strategy, he has everything that he needs, and everything he knows what he's looking for. All right, this is what I've been preaching to absolutely everybody. You know, have a plan, write it out. That man has done more research. He has listened to more traders. He has read more information about trading than pretty much anybody that I know. He has developed a very strict plan. He is, you know, even though that he's a little unsure of his trades, or he might be a little skeptical of his trades, he can still maximize his, you know, his profit and loss situation by just sticking to a very disciplined plan. So, Hunter has his little 60-day challenge that he has, and it is absolutely phenomenal. If you get the chance to practice that, I absolutely suggest doing so. I'm going to come out with some little monthly things as well that just disciplines things that I personally would like to do. That you know, it's. I know he kind of breezed by it earlier. The cold showers, right? So I have a deal right now where I have a deal right now that I am giving somebody $100 every day that I don't take a cold shower. Right? I mean, it's literally like I'm taking it that seriously. I want to be that disciplined. If I cannot practice that discipline, then I want it to cost me. I'm practicing discipline across the board. As soon as you open your eyes, walk in there, take a cold shower. One, it's incredible for when it comes to health benefits. Two, it just you're ripping off the Band-Aid of life. It's like you walk in that shower, you could easily just take that warm shower, and of course I want to just sit in there and just take a warm shower and fucking and just like it's just so fucking warm and inviting and nice and relaxed. And I don't want that shit. I want fucking cold, real ass life as soon as I fucking wake up. I want to wake up hard so the rest of my day is easy. The more that you are disciplined, the more the easier this shit is. I don't know if he really brushed on this. I had to take a couple phone calls while he was streaming, but one thing is that I really want everybody to start participating in, right? Whenever you have to stop out of a trade because that you have reached your risk management plan, just be happy. Be happy that you have that plan. Stop attributing a negative emotion to something that you have set up for your benefit, because it starts with small losses. Everybody, I'm sure every person in here has experienced that small loss that you're like, I'll just, don't want to take the loss. That loss will hurt. I'll just wait for it to get a little, get back to where it was, and then I'll sell. It could very fucking well get back to where you were. And then you're like, all right, I'm back here. I'll just sell when I get in profits. 3 minutes later, that shit's way below where you entered, way below where you should have practiced your risk management in the get-go. And now that small loss is a bit of a bigger loss. Then you fuck around and try to average down. What happens then? That bigger loss turns into an exponential loss. Then you're just battling yourself. It's like the saying, you can't dig yourself out of a hole. So stop commentating or stop connecting negative emotions to practicing risk management and stopping out of a trade. And that's something that I learned from one of the best traders in the world. One of the best traders of all time.
Mark Minervini?
Mark Minervini. What a fucking gangster of a man. 30,000% in 5 years, from $100,000 to 30 fucking million. And that man is telling you to appreciate your losses.
And
That's probably a guy you want to fucking listen to, right?
And he didn't do any leverage. No fucking leverage at all.
Equities.
Equity. No fucking leverage.
That is, and equity in the stock market. He doesn't have 24 hours a day like we have.
In the 90s even.
They didn't have any of that shit. He had stock market equity trading 5 years from $100,000 to over 30 million. And he's the one that's saying, appreciate your losses. So, I really, really highly suggest, one, appreciate your losses, appreciate that you have a risk management plan, appreciate that you have the opportunity to stop out of that position with a minor loss versus a major one. It's an incredible feeling. That's what we're all going to start saying. If you ever get stopped out of a position and it fucking rails afterwards, well, at least it didn't turn into a big fucking loss. Start seeing the bright side in that shit, because, you can't be great without practicing greatness first. You can't be good at something without learning how to be good at it first. Fucking Tiger Woods didn't become a time golfer overnight. Kobe wasn't crossing up people by not being at the gym at 6 a.m. And you think that they hated what they did? They loved it. They had passion about it. They were thankful they had a plan. They were thankful for those losses because they were able to learn from them. That's why I say have a journal, start a trading journal. Hunter said it too. Have that journal, dude. Evaluate those trades. Be thankful that you stopped out. Be thankful that you have that loss to learn from. You'll learn more from a loss than you will from any fucking gain ever. I guarantee it. I've been absolutely clapped on some fucking trades. I've had 6-figure liquidations. You think I didn't learn some shit about myself and about my trading? Absolutely. Overnight. It hurt for a while, months. Did I learn from it? Did I grow from it? Did I become a fucking even better trader off of it? Absolutely. Am I thankful for it now? 100%. Couldn't see it at the time. Guess what? That shit's over. That shit's done. I gotta be thankful for it. I'm thankful I had that opportunity because at least I didn't run it up to 6 figures and lose it all. I got my little 6-figure loss out of the way. Hopefully that's the only 6-figure I lost until I'm dealing with 10 figures at a time. So appreciate your losses the same way you appreciate your gains. Learn from every single one of them and practice that discipline because your discipline from outside of trading is what is going to give you discipline in trading. Your life's all fucked up outside of trading. You think it's going to be any better within trading? One of the places that you have to have discipline. One of the places where, like I say all the time, numbers don't give a fuck about your feelings. Don't come in here with feelings. Don't come here without a plan. Don't come in here without all that fucking chaotic bullshit that you think that you can just have your life all kinds of different fucking ways and then be successful at something when you put no real effort in. So started listening to some audiobooks, slap on some Mark Minervini when you're cruising down the road, late night when you're burning one, about to go to bed. Anytime, man. I'm on my second listening of the book that I think that Hunter just posted a minute ago.
Third time.
I mean, it's fucking incredible, dude. I mean, it really is. It really resonates with you. And he doesn't even hardly talk about trading that much. He does talk about the aspects of, some things that he did with trading and how the mindset, just having the correct mindset benefited his trading. But he doesn't talk about trading, but it resonates with trading so fucking well. It's incredible. He is being 100% real. He's being raw. He's being authentic. Go ahead and listen to that. Get some discipline under your belt. Change your life, man. And that's what this group is here for. We're all trying to change each other's lives. We're all trying to benefit each other's lives. We're all trying to make sure that, next year you can buy your mama a fucking Birkin bag for Christmas. You know what I'm saying? So that's what we're all chasing after. So be thankful for the losses because if you appreciate the losses, what do you think you're going to do with your gains?
Brody, are you able to give me perms to pin this fucking channel?
I thought you should have had the ability to. I can work on that here in a little bit.
No, I do.
If you want to, okay, cool.
So I posted the Trader Sync, which is an online trading journal. You may not be able to sync your crypto up to it, but you can manually do it.
You can actually sync KuCoin up to it.
Oh, that's dope.
Yep, you can definitely sync. You can sync if you have a KuCoin account. You can sync that up to it, and it will log every one of your trades.
Okay, so I pinned that. I pinned so everybody the guy that we're talking about, one of the greatest traders in the world, his name's Mark Minervini. I have done hours and hours and hours of research, just learning how he trades and how his mentality is. I know he wakes up and does box breathing, and he wakes up with I've gone through and learned what he does. And so I posted a YouTube playlist that I made. This is from my Market Knowledge YouTube channel. I posted a playlist that I made for um, almost all of his videos that he has on YouTube. His interviews, he does webinars that I found that are like you kind of gotta dig for. He does all sorts of shit. Like quick there's like quick summaries of the books he writes, all sorts. I think there's even an audio book on the book that Brody and I are talking about, Mindset Secrets for Winning. So there's just all sorts of different interviews and videos on Mark Minervini in that playlist. I think there's 33 videos in total. 32 actually, because I think I did this one twice. But yeah, so there's all so much information in this playlist right here that you could just become a phenomenal trader just in that playlist. He's such a G. In 2021, this motherfucker did. Oh, so last year, this motherfucker made 375% profits in his fucking portfolio. And how do I know this because he did the trading championship. There's
I'm gonna beat his record by the time I'm the age that he was whenever he made his first mill. I swear to fucking God. Sorry, I didn't mean to cut you off, Hunter.
I'm trying to
As something I'm speaking that shit absolutely into existence. This year is the first year that I'm going for his 5-year record. Going for that. I'm after that 5-year record, man. I'm trying to absolutely wreck that 5-year record. I'm trying to make that 30,000 look like some weak shit.
Why can't I find this fucking thing?
You know, you guys are actually making me better at it too. Swear to God. I gotta really practice what I preach. You know. So and we're about to start doing a lot more interactive trading streams. Not just doing TA. I'm talking about sitting on that damn computer and trading actively, scalping. Hunter has seen me do it, and that's something that I want you guys to be involved with too, so you can see kind of like really, real time what I'm looking for, what I like, what I do whenever I try to do scalps and so on and so forth. So,
I've been at work, and this motherfucker, Brody, bro. I've been at work doing my hustle, and he's just sending me pictures. $1,000 an hour he's making. He runs his portfolio from 2,500 to like almost 6,500 while I'm just sitting there fucking trapping. It's like, bro.
Yeah, man. I literally found found a portfolio or got access to a portfolio that I thought was done for, and it had $1,400 in the futures account. It was 1465. Bring that shit way the fuck up. It was a blessing. So, well, we're gonna learn. We're all gonna do this shit together. That's why I'm excited about the market starting to get spicy again, coming down. We're taking some of these altcoins and ripping them in half. You got to be thankful. Oh, bro. Yeah. Why do you got to mention it, Paper Chaser? You snitched on yourself. No, that's gonna get big time bounce back, big dog. Don't even worry about that.
Brody.
Yes. What's up, brother?
Look at this bear shorter block on Matic on the 15.
Oh, God damn it. I'm in a manic position right now. Don't tell me that.
Bro, look at the damn.
Oh, fuck. I'm just super up on it right now.
Yeah, you should be. Look at the daily. It looks like a fat head and shoulders. And it's below the 50 MA on the fucking on the 12 hour. It's below the 21 on the daily. You're starting to come. So the 21 is downtrending on the daily right now. This little
Have you pretty much said all you need to say about risk management, Hunter?
you're golden. Yep.
All right, man. Anybody have any questions when it comes to risk management? We're gonna kind of shift where the stream's headed. Any questions about it? Fucking discipline. You know, I'm going. I'm shooting for. I just want a light 10K week on my port this week. I'm gonna set my goal.
Yeah, and so if we want to go over it real quick, number 1, persistence, never give up. 2, never take a large loss. 3, make sure your risk to reward is more than 3 to 1. 4, don't fight the trend. Don't trade when there isn't a trend unless it's a short-term trade. 5, don't be greedy. Pigs get slaughtered. Respect your stop loss, respect your take profits. Don't fucking change them. 4, have a trailing stop loss. Or that's 6. Have a trailing. Alright, dog. I'm gonna stop the recording right there. And that will be the end of our risk management portion.